chart we're looking at right now is the daily chart of the ETF TBT. As you already know, this is an interest rate play. If you think interest rates are going higher, you would buy into the TBT. If interest rates move lower, this is going to move lower. So as the 30-year T-bonds move lower, right, interest rates go up. So we're moving off those lows, and as you can see, the market is moving higher. Thursday of last week was a big move to the downside, as you can see, and what I pointed out was the first buy in which I was looking to go long was at 38.2% retracement as the market sold off intraday, as the overall market sold off, right? So did the TBT, and we dropped right in between the mid to lower band, right smack dab at the 38.2% retracement from this this LL, which lowest low on this chart, up to this high actually, right? Came down beautifully at 65.57 and bounced intraday, closing right up in here. Friday, as you can see, moved higher yet. And then today actually opened up higher, and we've traded up to 70.09, the highest it's been in a long time. We actually took out this high, right? We actually took out this high. Now let's take a look here and back it up a little bit. We're going to really back this up. All right. Now we've got this white horizontal line, which represents the high. The highest this market's traded in quite a long time. That high was 69.64. Last time it traded above that level was back in May of 2012, so over a year ago. Market's been lower and pretty much sideways for quite a while, and we're finally breaking out of that range. What'll be interesting is to see if we can close above that today and tomorrow. See if we can have a closing above 69.64 for maybe a couple days. If we get that, I think we'll continue moving higher. Again, this is an interest rate play, and these are the 30-year bonds right here. And the 30-year bonds are starting to crack down through these lows. Now, if we look at a weekly chart, we're starting to break down through this legend here. Right? We've been kind of in a range. When T-bond futures were traded at these all-time highs, this is when interest rates were at the lowest level ever in history, and we have been making lower highs. We tested this high, and we've since moved lower, and we've broken down through this low. I need a couple more closes above that low, but again, this is an interest rate play. And let's just go back to our chart here of the TBT. Currently, we're trading at 69.66. All right, 69.66 up in here. Again, stuck my foot in the water in here, long, and I actually this morning bought just a little bit more. Brings up my average price a bit. Just bought a little bit as it took out that high and it was rallying higher. So this is, again, a long-term play here, so we'll sit back and see what happens here. Let's look at gold, the ETF GLD. As you recall, on Friday, I exited this market pretty much with a break-even trade because it wasn't really going anywhere. This is still on my radar. I'm still looking for a potential double bottom to be in play here. See, got the retest right there. We've moved up a little bit. So really what I'm going to wait for in here is some type of reversal pattern, right? Either the bullish outside vertical bar, or again a tight little inside vertical bar, where I then look to reposition myself to the long side there. And look real quickly at Friday's E-Mini chart. I was doing that video as the market had gapped from Thursday's close right here to Friday's open. I believe I was putting together the video as the market was trading here, and I told you if the market had taken out that high, the market should go significantly higher, and it did. Once it broke that high, tried to fill that gap, failed to fill the gap. It tried real hard, got real close, and then turned on the dime, Once it took out the initial high of the day here, we created the V, right, down and up, took it out. You could have been a buyer immediately as it took out that high, or you could have been buying these dips here, right? Made a higher high, came down, came up, pretty much topped out at the daily R2 at 1642, came down right in here. And if you were to measure your fibs, let's measure from the fib from the low of the day to the high up until that point. Let's see where we get. Look at this. Look at that, 38.2% retracement again from this low up to this high. Look at that, 38.2 was right there, right? 38.2 from low to high, right back at the 50 exponential moving average. Market bounced not quite as much as I would have thought. I would have thought the market would retest the high of the day. It didn't, came down a bit further, right? Came down to the 61.8% retracement to a pivot right in here. Look at this, created that inside pattern, that famous, right, that famous bar you hear me talk about all the time, that inside vertical bar at a logical support level and an established uptrend is like taking candy from a baby. Your risk is very small on that. So again, you get a lower high than the prior bar's high, a higher low. Your initial stop loss is below the prior bar's low, right? So as it takes out the high of that inside vertical bar at 1633.5, you're long with the sell stop below the prior bar's low of 1631.25. And as you can obviously see on this chart, as it takes out that high, the market rallies and actually takes out the high of the day. So Friday's day, trading day in the E-Mini S&P's, not a bad trading day. Today, markets opened up even higher. Look, it opened up higher. And if we flip it on a daily chart, look at what we're getting. Let's see. Okay, again, just a quick recap. If you recall last Thursday, I said what, 1605 down to 1595 should be big support, and it dropped right down in there, stopped at 1596.5 here, and turned. And look at where we're up. I mean, over 1643. I think we hit 47 today. 47. Well, actually 47 points up from the midpoint from where I called the 1605 to 1595. If you split it in half, it gives you about 1600 even. Again, we've traded up to what, 1648.5. Now what I want to do, because look at, is the market going to go straight up and retest the high up, the highest high here? I doubt it. I would bet that we're going to get some type of reaction back down, trying to at least retest this low first. So look at, we've moved up through the 38.2 from this high down to this low. We've hit that 50% actually on Friday. And look at today, Monday the 10th, we're real close to that 61.8% retracement. Okay, so I would suspect that somewhere in here we're going to see some type of resistance, and we're going to see the market try to sell off, try to come down. Now, how far will we come? Will we take out this low? I don't know. Nobody knows, right? But I would expect some type of pullback to try to retest this. Now, if we're able to take out this low, I think we're going to challenge, the 6 to 10% overall market correction if we're able to take out this low. So again, we'll see what happens. Hope that helps. Have a great day. Bye for now.